So it is the 10th of April, and we've had a very, very interesting week with what's been going on all over the globe. So, we've talked about that here and how it's affected the market because that's what's really been giving most of the creating most of the response in the market. Start looking at what we would typically look at, which would be, our manufacturing index, which was down just a little bit. As far as durable orders, that was up a tiny bit. Actually, durable orders themselves down quite a bit. Durable orders excluding transportation was up just a little bit. You get consumer credit that looked like that was up significantly. You look at personal income down quite a bit. Personal spending's down. The personal consumption expenditures, that was flat. But you get to the core, that's also flat. Initial claims bumped up. Continuing claims, they went down. So there's some whipsaw going on here. Then you also have CPI. CPI went up quite a bit from what they're anticipating. The core CPI actually dropped a little bit. Factory orders, they declined. Consumer sentiment, that has declined. And so when you start looking at things as a whole, things are not looking. It's kind of a mess, honestly, when you start look at it from that perspective. And then you have a lot of at least the CPI, from what I could believe, as far as things that are pushing up the inflation numbers that they're looking at, has a lot to do with the energy costs. Energy costs are through the roof with what's been going on overseas. And then the only thing that's even slowed that down is the fact that there's a bit of a ceasefire, but then you still have things happening in other countries. So who really knows how is this going to go? There's a lot of speculation on what's going to drive the market or the rates or where the rates are going to go. The only thing I can possibly do is keep talking price action. That's it. Looking back on the history of things and how it's been affected in the past just with these trading levels. So let's look here. Let's just go over to the bonds. I want to be real quick here, let you guys get on with your day. But bonds peaked out. What's interesting here is when you had this ceasefire, this is where we're looking at this, like, this is the day. What's going to end up happening? And we had things getting very, very positive. And then, of course, we have the ceasefire, it does well. The next day, gap up open, but it pulled back because even though that gap up open, there was a lot of people throwing money in there to bid and get it. They got it. But then there's a lot of sell-off because it doesn't look like, I'm guessing the traders think, okay, we probably overbought here. So they sold off a little bit. But since we had that gap needed to close. And I'm going to zoom in on this gap a little more so you know what I'm talking about. When you have a gap up open from this open here, and the wick went this high, which is, we started off at par 77, went up to par 79. So it was really only 2 basis point jump here when you're talking about that movement. And then the next day it opens up way up here, 101.05. That's a significant jump, right? So that was too big of a jump. It also hit this level here, which is a trend line. So we had one of those trend lines that impacted it. Pause that. Well, then it sold back down and it went to another moving average. So not trend line, but a moving average. And then went to another moving average and pulled back. And then yesterday tries to open high, but it closed the gaps. That's the main thing. This gap didn't close over on the 8th. It did close on the 9th and pulled right back up. And then where it opened, it's still in that same range. So we're squeezing into this range. We're also being supported by a moving average. So when you start looking at all those things, we don't know what direction it's going to go. What we do know is it's right in the middle of this here channel that was established the day they announced quantitative easing. We now have this as a floor, have this as a ceiling. I'm surprised that we did not bounce off of this and go back lower because this is, when you look at patternistically, it would hit bottom and pull back and pull off of this. So we didn't pull off of it, interestingly enough. We stayed in the middle. So this is breaking pattern already. So it's because before, if you look at the pattern that we had in the past, when it does this, it would come from the bottom, hit the top, then come to hit the bottom, hit the top, hit the bottom, hit the top. Well, we've hit the bottom, we come to the top, then we hit the bottom, but we plowed back through the bottom. So this may be reminiscent of this over here. If we look back over in this area, back in 2022, it hit the top. When it pulled back down, it went back and hit the top again. So we may be actually doing that. I can look at what the short order was. That happened in a very, very short window. Pulled back in, actually bottomed out, went right back to the top, bottomed out, went back to the top again. So we may be experiencing a version of that. So if it does do that, I don't know how I just zoomed that, but if it does do that here, we could experience it over here And I got to zoom quite a bit here. So we could experience that swing over in here and start bouncing up in there. So there's a possibility that that might be the case. If that's the case, we could be whipsawing inside that a little bit and just trying to catch it on the highs when we're talking about locks. So that is, and the other problem we have here is there's going to be a lag in the issuance of the rate when you got that kind of volatility. So some might say, hey, the rate, we just heard the MBS got better. So does the rate go down? Traders, we may not have capital markets release that because it's so volatile. They may pause to see if it actually holds and trades into it the next day. So know that just because it's whipping around like that and we see an improvement, you're not going to get an automatic improvement in interest rates because they could release a rate just for the market to move quickly, and then all of a sudden their rate's no longer good. They got to re-release. So sometimes they'll pause in a volatile environment. So that's what we got for you right now. A lot of volatility. If the deal pencils, right, if it pays for itself, you can get some sort of cash flow on it, and your tenant's paying off your mortgage, and you get some appreciation. You can hold on to that property long term. It may not be your cash flow property. It's a possibility. Cash flow property might come later. This might be that one really, really huge wealth growing property because of amortization, appreciation, and tax benefits. Your depreciation is huge too. So think about that depending upon your own size. Yeah, we'll talk about this a little bit more later next week, but right now we're kind of holding in a little bit of a pattern, and it's doing exactly as we had anticipated it might be with those gap ups and close that gap. So we'll see. I will get with you guys on Tuesday unless there's something crazy volatile on Monday.